What's up guys, welcome back to my channel. In this video, I'm sharing with you guys my journey of taking $1,000 to over $100,000 in 2026. I'm mostly trading SPY and SPY options. And we just finished the first full trading week of January, and so far we are green on the week. We had the biggest gain on Monday, and then we pulled back into the middle of the week, and then we finally finished the week on a green note. So in this video, I'm going to share with you guys my profits, my losses, and what I look for over the next few weeks, because it's going to be very pivotal. We have earnings weeks coming up, and then I'm going to top it off with technical analysis. So stay tuned and subscribe if you haven't. Now, on Friday, we had a $338 gain with an unrealized loss of $119. Why do we have unrealized losses? Well, I'm still in this SPY call position. We have a January 23rd expiration with 700 calls. And I'm going to explain to you the reason why I still have these options. So I trimmed a little bit near the end of the day because the market was pulling back a little bit, but I still have a relatively small position on these SPY calls. Now, next week kicks off earnings season. Starting with the bank earnings, we have JP Morgan, we have Bank of America on Wednesday, we have Goldman Sachs on Thursday. I believe that earnings season is still going to be a positive catalyst for the S&P 500 going forward. And not only that, after the week of next week, we have Netflix, which is the biggest tech company that's going to report on Tuesday. And then after that, we have the Mag 7 earnings. We have Tesla, Microsoft, Meta, and then we have Apple on Thursday. So it's going to be a very pivotal late January earnings season. And not only that, we have the FOMC meeting on January 27 to 28. So if the FOMC meeting combined with the tech earnings are going to kick off a new leg of the bull market, I would suspect that the S&P 500 should pull back into some of these key pivotal events before making the next leg higher in February. Now, what I find very interesting is that a lot of people kept shorting the market at where the S&P 500 was near all-time highs. 700 is a magnet for the S&P 500. I expect 700 to be hit early next week. And, we are holding above all these key moving averages. We have 682, the 9 EMA sitting at 682, which is this yellow line here, holding above the 20, which is this purple line. We're holding above the 50, the 100, the 200. And you can see that the correction in November, the weekly held the 20 perfectly, and we never tagged the 20 ever again. So the bull trend is intact unless the market starts breaking down and breaking below these key moving averages. And I believe that the uptrend should continue into next week. You can see on the SPY daily time frame, the MACD is bullish, so signaling bullish momentum. And again, the Thursday correction that we had, the pullback that we had, we still held the 9 EMA, and the market wants to move higher. Like, I don't know what else to tell you. I'm in a few Discord groups where, people are saying to short the market. But look, unless the market tells you that it's breaking down, there's no reason to be shorting the market. So that's why I believe that, 700 is going to act as a magnet for the S&P 500 going forward. MACD is bullish on a daily time frame. On the weekly time frame, things are looking good on the higher time frame scales. Now, on the 1 hour time frame, you can see that we could be forming some sort of bearish divergence here on the RSI, but the MACD tells us that we are continuing to go higher. And you can see that we held the exponential moving averages very well, which is the yellow line here. So I believe that the S&P 500 should continue to push higher, even though we got this red candlestick, probably profit taking over the weekend. On Friday, uncertainty over the weekend, but I believe that the S&P 500, again, should continue to push higher. And same thing on the 15-minute time frame. You can see that the MACD wants to curl and push higher. And same thing with the 4-hour time frame. So you can see that we barely even broke any of these moving averages. And the 100, the 200, we held the 50 perfectly well. And the 4-hour is kicking off another bullish, momentum signal on the MACD. So overall, I am still holding my 700 January 23rd calls. If the market does decide to pull back even more next week, I will be adding, as long as, on the weekly time frame, we are holding all these moving averages. I believe that 700 should act as a magnet, and I believe there should be some sort of overthrow, and not just, tag the 700 and then pull back. So hope this helped you guys, with your S&P 500 journey and your analysis. And if you have any questions or comments, please leave them down in the comment section below, and I'll see you guys in the next video. Peace.